Hello family. Today I'm going to take you through how to prepare cash flow statement. I'm going to show you everything that you need to know about cash flow statement from the scratch to wherever level that you wish to be. Now, cash flow statement is one of the important financial statements that is being used by managers and accountants to explain the rate at which money comes into the organization and the rate at which that money is being spent. So they explain the financial status of the organization to the business owners, because in some companies the business owners raises allegations that the accountants or the business managers have embezzled the money. For instance, in a typical case, on the screen on the left side here you can see two balance sheets. So one is on from 2019 and then the other one is from 2020. Then on the right you see the income statement. So for instance, coming to the income statement, during the year 2020 the organization made a net profit of 25,000, but when you move to the balance sheet at the start of the year, which is end of 2019, they were having 2,000, but at the end of 2020 they have 6,000. Meanwhile, they are saying that during 2020 they made a profit of 25,000. So sometimes business owners don't understand some of these things, so they raise allegations, and this is exactly what the cash flow statement seeks to address. So some of the reasons for the profit not reflecting in the statement may be that the money is being held with customers or the debtors. They haven't paid for the goods yet. You sell the goods to customers, but they haven't paid yet. Other causes may be that the firm purchased fixed assets or they dispose of some fixed assets. So that's basically what we are going to look at. So we will make use of these two statements. We will make use of the 2019 balance sheet and 2020 balance sheet, and in addition to the 2020 income statement. Now, by way of preparation, the cash flow statement is being done using two methods. We have the direct method and the indirect method, but this particular video is on the direct method. So after this video I'll make the indirect method, which I will provide a link to that video in the comment section of this particular video right away. And also, for the basis of the direct method, I've done a video tutorial on control accounts, which basically we are going to employ in preparing the cash flow statement. So in case you haven't watched the video on control account, how to get the unknown figures, or how to get the cash paid to suppliers and then the cash received from customers, you can watch that video. I'll provide the link to that one also in the comment section, but we are going to go through all those things all together. So let me quickly introduce you to the format. We will use this particular question, but let me show you the format for preparing cash flow statement before we move on. So on the screen you can see the format for preparing cash flow statement. The cash flow statement generally is divided into three parts. We have the operating activities, the investing activities, and the financing activities. When you go under the operating activities, we are looking at the monies generated or the monies paid for daily business operations or daily business activities. So when the organization pay for utility bills, when they pay salaries, when they pay for stationaries, when they pay their suppliers or they receive money from the sales of their product, it all goes under the operating activities. Now, when it comes to the investing activities, here we are looking at the things that the organization have invested into. So when the organization have purchased fixed assets or fixed equipment, when the organization has purchased landed property, or when the organization have invested in stocks or have invested in other businesses, those monies go under the investing activities, and income received from other investment also go under the investing activities. Then we move to the financing activities. The financing activities talk about where the organization gets money to support itself. So we are looking at if the organization sells shares to shareholders, if they take loans, if additional capital is being introduced into the organization, or if the firm pays dividend. They are all going under the financing activities of the firm. So after you are done with these three parts, you get what we call the net cash flow. Definitely you add the net from operating, investing, and financing. Then you have the net cash flow. When you add the net cash flow to the opening cash and cash equivalent, you get the closing cash and cash equivalent. I'm going to show you what I mean by all these stuff. But first of all, you need to know that when we are paying money to someone, or we are paying money for something, we put it in bracket to indicate subtraction. We are subtracting it. But when we receive money from our customers, we leave it as it is. So we leave it like that. But when we are paying, we subtract. So the opening cash and cash equivalent that I mentioned, I'm referring to the previous year. That's the amount at the previous year. Then the closing cash and cash equivalent, I'm referring to the amount at the end of the current year. So for instance, as you can see on the screen here, under 2019, the opening cash and cash equivalent will be this 2,000. That's the 2019. Then the closing cash and cash equivalent will be that of the 2020. And mind you, under the cash flow statement, it is only the cash items that goes there. So credit sales doesn't go there, depreciation, bad debt, those stuff doesn't go into the cash flow statement. Under the direct method, they don't feature over there. So now let's start with how to prepare the cash flow statement. So on the right, I have my income statement. So we'll start with whatever way. But then mostly when we are preparing the direct method, we start from our customers, because that's where the organization gets money from. So we are going to look at our debtors, which are our customers. So we sell the goods to them. So here in the income statement at the right here, we see sales is 60,000. So when we move to the balance sheet, we will see debtors under current assets here. So for 2019, the amount was 45,000, and for 2020, the amount is 48,000. So let me show you how to get the unknown figure. So the explanation here is that in 2019, at the end of 2019, our debtors were owing us 45,000. Then during 2020, we made sales of 60,000 to them, which is in the income statement here. So 45,000 from 2019, 60,000 sales in 2020, making 105,000. But at the end of 2020, we are saying that our debtors are owing us 48,000. So what happened to 105 before it's become 48,000? The difference is the amount of cash that we receive from our customers. That's the ideology that we are going to employ in preparing the cash flow statement. So let's move to our Excel, where I will take you through the step-by-step procedure in preparing the cash flow statement. So the process involves analyzing the 2 years of the financial statement, and then the 2 years of the balance sheet or statement of financial position, and comparing it with the income statement, which is a statement of profit and loss. So we are going to start with our debtors control. So I'll have my debtors. So I'll state my opening balance. So as we have seen in the figure for 2019, you see that the opening balance for the debtors was 40,000, I suppose. Okay, 45,000. The amount was 45,000. 45,000. Then during that year, we made sales to our debtors. So how much was the sales? The sales in the income statement was 60,000. 60,000. Then have we received some amount of money from them? We do not know. So we just write cash received. Cash received from our debtors. So the cash received, we do not know. So I will just indicate it with X. Then that's what will give us the closing balance, which is the amount at the end of 2020 in the balance sheet. So at the end, the balance sheet says that at the end, 48,000 is what our debtors are owing us. So that 48,000 become our closing balance for cash and cash equivalent. So we are looking at, so we have 48,000. So 48,000 is the closing balance. So now, what is the unknown figure? So if you do it algebraically, it will be 45,000 plus 60,000 minus X is equal to 48,000. And by doing so using my calculator, I get 57,000. 57,000. So it means that during the year we receive 57,000 from our customers. So I'll move to my cash flow statement. As I've indicated, Apex Limited statement of cash flows. Then under the operating activities, since debtors or selling of goods and services is under the operating activities, I'm going to put this one there. So I have cash received from customers. Cash received from customers, and the amount is 57,000. Yes, so what is the next item? So right now we are under the current asset, and then mind you, mostly the operating activities are found under current assets and current liabilities. Yeah, so let's move to the next one, which is after the debtors, we move on to our inventories. So inventories at the start, which is 2019, the amount was 3,000. Then at the end, the amount was 4,000. So do we use inventories in the income statement? Yes. In the income statement, you can find inventories under sales, which is the cost of sales. So the inventories are the raw materials or the goods that we buy to process or we buy to sell. So they are the cost of sales. So we use inventories of 20,000 in the income statement during the year 2020. So we were having 3,000, but we use 20,000, and at the end we say we sell 4,000. So probably it may be that we purchase some inventories. So we move back to our cash flow statement to demonstrate the amount of inventory purchase, because we do not know for sure how much was purchased with regard to inventory. So I will indicate inventory control account. So inventory control account. So I'll have my opening balance. For the opening balance was 3,000. Then to this one, we add the purchases, because the opening balance was there, then we purchase something. But how much we purchase, we do not know. So we will just add purchases. So purchases, that is X. Purchases. Then, so we have 3,000 from the previous year, and then we have X from the current year. So in all we have 3,000 plus X. So how much do we use? So that one we are going to subtract it. So we use, so the cost of sales was 20,000. That was in the income statement. So we have minus 20,000. Minus 20,000. So that is what will give us the closing balance for the inventory. So how much was the closing balance for the inventory? Let me go to the balance sheet for 2020 and let's see. So inventories 2020, the amount was 4,000. So it means that the closing balance is 4,000. So I'll go back to my Excel and then write 4,000 here. So the inventories is 4,000 for the closing balance. So how do we find the unknown figure, which is X? So in this case, it will be 3,000 plus X minus 20,000 equal 4,000. Now, by solving the unknown using my calculator, we can find that we purchased, or the firm purchased inventory of 21,000. So inventory was 21,000 that was purchased. But then, so it means during the year 2020 they purchased 21,000 of inventory. But do we go and record the 21,000 in the cash flow statement? The answer is no, because we do not know whether they paid for all these 21,000 inventory purchases. Remind yourself that the cash flow statement, only the cash items go. So credit sales and credit purchases don't go. So the one that we pay for, that's the one that will go there. So how do we know whether the firm pays for these inventories or not? We will get it from our suppliers. Our suppliers are people that we call our creditors. So we move to the income statement and see. Sorry, we move to the we will then move to the balance sheet and see where are our creditors. Our creditors can be found under current liabilities. So on the screen here, you can see under current liabilities, the first item is accounts payable. The accounts payable is basically our creditors. That's another name for referring to our creditors. So accounts payable. So 2019 the figure was 25,000. Then 2020 the figure was 10,000. So we will move back to our Excel to examine how much was paid for the inventory. So we will prepare what we call creditors control account. Creditors control account. So under the creditors control account, we will still have the opening balance, and per what we have seen in the income, in the balance sheet, the opening balance was 25,000. 25,000 was the opening balance. Then, so it means that we were owing our creditors, our suppliers, 25,000 from the previous year. Now, the current year, how many inventory or how much inventory do we purchase from them? That's this 21,000. We purchased 21,000 from them. So here is the use of the inventory control account. So we have purchases. So if you do not do the control account, you cannot get how much purchases was made. So the purchase was 21,000. Then how much do we pay to our suppliers? That is the unknown. We do not know. So we indicate cash paid. Cash paid. So for the cash paid, we can represent it with X, and that will be subtraction. So we are going to subtract it. Then that will give us our closing balance for the creditors. And how much was the closing balance for the creditors? That one is 10,000, as we have seen in the balance sheet. So that one was 10,000. But let's confirm. So our creditors is under the current liabilities. Yes, no. Our accounts payable is 10,000. So that's the closing balance for the creditors. So 10,000. So we then move back to our Excel sheet. So finding for the unknown, the X will be 25,000 plus 21,000 minus X equal to 10,000. And by solving it, you find that they paid 36,000 to our suppliers. So actually they paid 36,000 to suppliers during the year 2020. So you come to your cash flow statement and write cash paid to suppliers. So cash paid to suppliers was, so this one is a payment, so you put it in bracket. So you put this one in bracket. So it is 36,000, indicating subtraction, which is minus. So we move on to the next operating activity, which we will find either in the income statement or in the statement of financial position, which is the balance sheet. So the next item is pre-operating expenses. The pre-operating expenses comes after inventory. So at 2019 the figure was 3,000 and 2020 the figure was 2,000. So let's move. Was there anything on operating expenses in the year 2020 under the income statement? Let's move to the income statement and check. Okay, so in the income statement here, as I highlight, we have amortization of pre-operating expenses, and then the figure was 1,000 cedis, as in the bracket here. Amortization of pre-operating expenses, so 1,000 cedis. So let's move to, so we have in the balance sheet 3,000 for 2019, 2,000 for 2020, then amortization was 1,000. So this one is a prepayment, so the way of handling it is quite different. So it's like the organization has deposited money for operating expenses, which was 3,000. Then during the year 2020 they used 1,000 out of it. So for 2020 we still have 2,000 left. Okay, this clearly shows the firm during the year 2020 hasn't paid anything for that one, but let's use our Excel to demonstrate whether it is real or not. So I'll come to my control account section. Yes, let me clear this one as well. Yes, so we have operating expenses or pre-operating expenses control account. So pre-operating expenses, so pre-operating expenses control account. So the opening balance, as we have seen, was 3,000. So 3,000. So 3,000 was the amount that the organization deposited with the authority responsible for managing the pre-operating expenses. So the opening balance was 3,000. During the year, the firm might have paid something. So during the year 2020, the firm might have deposited some additional money. So let's indicate cash paid for that, cash added, or added cash. So here we will not subtract because it's a prepayment. This is a prepayment. So we assume that the firm kept money there and then they have added on. So we are adding the X to the 3,000. Then the actual operating expenses in the income statement. So we have the operating expenses in the income statement for the year 2020. I think that was 1,000 cedis. Let's check. Okay, amortization, yes, 1,000 cedis. So when you come to your Excel, so they consume 1,000 cedis out of it. So 1,000. Yeah. So that will give you the closing balance in the balance sheet for the year 2020. And how much was the closing balance? That was 2,000. Yeah, so using the algebraic method, you realize that to get the value for the unknown, it will be 3,000 plus x minus 1,000 equal to 2,000. So by my calculator, the answer is 0. So nil. So for pre-operating expenses, the organization paid nothing. So pre-operating expenses, the firm paid nothing. So it will be minus 0. So which is actually dash. So we move to the next current item, which is either the current asset or the current liability. So let's check the current asset. The next one, okay, we have the total current asset, which we are not going to include anyway. So the top, cash and cash equivalent, that one we will not include it because that is what we are trying to find. So that will be at the end because we are trying to find how come the figure increased from 2,000 to only 6,000 despite making profit of 25,000. So that's what we are trying to find. So let's move to the current liabilities as our next alternative. So okay, we have current liabilities, we have income tax. Okay, actually the income tax is not part of the operating activities, but it comes immediately after the operating activity. So let's just include the income tax once and for all. So the income tax, as you can see here, for 2019, the firm was owing income tax of 6,000, and then at the end, which is 2020, they were owing income tax of 10,000. But let's check the income statement. What was the actual income incurred during the year 2020? So taxes on income was 6,000. So income tax was actually 6,000. 6,000. So let's move back to our Excel to demonstrate how to get the amount paid for income tax. So we have income tax control, income tax control account. So the opening was how much? Opening balance. The opening balance was 6,000. Then during the year, which is in the income statement, the income tax expense was also 6,000. So I'll add my 6,000 to it. Yes, so how much did we pay for income tax during the year? We do not know. So we have cash paid. Cash paid for income tax. So that one, we put it into bracket as X because we do not know. So then we have the closing balance. The closing balance was the amount under 2020, which was 10,000. So we have 10,000. So how do we get the unknown? 6,000 plus 6,000 minus X equal 10,000. So we have, by my calculator, the income tax that was paid was actually 2,000 cedis. 2,000 cedis was paid for income tax. Yes, but since I said that the income tax is not actually part of operating activities because it's a tax imposed on the firm. So we will bring it after we have included all the operating activities. So now we are done with the current assets and then the current liabilities. So now let's move to the income statement to look at other cash payments that were made but not included in other cash payments that were made but not included in the balance sheet, meaning the organization paid for them in whole as they were incurred. So let's look at the income statement here. So I'm going to zoom it a bit. Yeah, so we have administrative and selling expenses, which is 4,000. We have interest expense, also 4,000. We have depreciation, which is not going into the cash flow statement. So that one is not part. Then we have, okay, this net operating. Then we have investment income. This one will go for, it will go under the investing activities. Yes, then we have income tax. So we have to include these three items. They are cash items but paid for in full. Administrative and selling expenses, interest expense, which was paid. Okay, I think there are actually two items, not three anyway. So let's do that quickly. So there are two. So administrative and selling expenses 4,000, interest expense also 4,000. Yeah, before we bring in the income statement. Sorry, the income tax. So I'll move to my cash flow statement. So when it comes to the operating activities, you are looking at the day-to-day activities of the firm, administrative and selling expenses. So that one, it was a payment. They paid 4,000 for it. So that one, there's no accrued amount in the balance sheet. So we just write it straight forward. There's nothing, or there's no need for control account. So you just write it straight forward. So we have interest expense. Interest expense. So interest expense. That one too, the amount was 4,000. So as usual, we subtract the 4,000 as well. Yes, so let's add to get the total. Let's add to get the total. Yes. Yes, so the total is 13,000. So that's the net flow from operating before we add income tax expense. So I'll have my net flow from operating activities. Yes, so now we bring the income tax expense, which is 2,000. So we have income tax expense, which is another cash payment item. So that one is 2,000. So we write the 2,000, which is a subtraction. Yes, so we then sum it again. Yes, so we sum the 13,000 and then the 2,000, or we subtract the 2,000 from the 13,000. So here we have 11,000. 11,000. So here is the total net flow, final net flow from operating. So I'll just put it in cap. Net flow from operating. You can decide not to write anything over here. Here, yes, not to write anything. But to distinguish it, let me use the border to underline it carefully before we move on to the financing. And then so I'll just indicate it like this. So here we sum. Yeah, so we are done with the operating activities. So the next activities that we will tackle is the investing activities. So we look at investing activities. So under the investing activities, what are we looking at? Has the firm purchased fixed asset, or have they sold any fixed asset? Have they done any proceed, or have they invested in any other company, or have they earned any income from other investments? So additional information is provided beneath here. The following additional information is relevant to the preparation of the statement of cash flows. Equipment with net book value of 15,000 and original cost of 21,000 was sold for 15,000. So let's check from our balance sheet and see something. So for the balance sheet, when we move to the top, so okay, property, plant, and then equipment. So 4524. Okay, so it means part of it was sold and a part of it has depreciated as well. So this information is telling us the equipment with net book value of 15,000 and original cost of 21,000 was sold. So this means that the 21,000 was the cost at 2019. Then the 15,000 was the net book value at 2020. Okay, so it means that it has depreciated by 6,000, but it was sold for 15,000. So our interest is looking at how much the organization received from selling that fixed asset, or how much the organization gained from disposing the fixed property, which is 15,000. So it was disposed of for 15,000. So let's check something from the balance sheet. The equipment has original value of 21,000. So 21,000 minus the figure for 2019 will give us this closing figure, which is 24,000. So that's where the 24,000 was coming from. Then the 12,000 for depreciation less the depreciation of the one sold. So the one sold has depreciated by 6,000 because it was 21,000, but the net book value at 2020 was 15,000. So it means it has depreciated for by 6,000. Now, when we subtract that depreciation from the accumulated depreciation of the previous year, so the accumulated depreciation of the previous year was 12,000. So when we subtract 6,000, it left with 6,000. So it means that the remaining asset, which is the 24,000, they have extra depreciation of 4,000 in the current year. But that's not of interest to us, and don't bother yourself with that one, because the depreciation is not coming into the statement of cash flows. So all that you are interested in is how much was the asset sold. So the additional information has provided you with that information. The asset was sold for 15,000. So the 15,000 is your concern. So you move to your investing activities, then you write disposal of equipment. Disposal of equipment or fixed asset. So the firm received how much? They received 15,000 from that one. Disposal or sale of equipment. They received 15,000. Then which other investing activities? Let's check. Okay, so let's look at the income statement carefully and see. Have they invested somewhere? Okay, yes, there is an investment income. So here we have investment income. Let me highlight it for you. So investment income, meaning they have invested money somewhere and then they have received the income. So 4,000, they have invested money somewhere. So the investment income is 4,000. So income from investment or investment income. So it will go under the investing activities. So that one is 4,000. That one is 4,000. Yes, any other item. So have they purchased any fixed asset? Have they purchased any fixed asset or any equipment? Let's check the balance sheet. Not really, because the one sold has an original cost of 21,000. So 21 minus 45,000 give us 24,000. So virtually no asset was purchased. So that ends the investing activity. So there are only two. So we will sum the investing activities. So investing activities. So we get 19,000 from investing activity. So they dispose of an asset for 15,000. Then they receive investment income as well. So net flow from investing activities. So the net flow from investing activities is 19,000. So I'll just underline it carefully. We are almost done with the direct method. So that is that. So the next thing that you look at for is the financing activities. The financing activities. Financing activities. So under the financing activities, have the organization paid loan or have they taken extra loan? How will we know? We will look at our balance sheet. So let's check from the balance sheet. If the firm has taken extra loan, we will know. So let's look at our long-term liabilities for the financing activities. Okay, non-current liabilities. Okay, 0 for 2019 and then 0 for 2020. So the organization hasn't taken any loan. But if the case was that it was 0 in 2019, and let's say for instance 10,000 in 2020, it means that during the year 2020 the organization has taken loan of 10,000. So the 10,000 will be included as loan in the balance, so in the cash flow statement as a financing activity. But here it is 0, so there is nothing on loan. So we move on to other financing activities. Has the firm paid dividend? Have they paid dividend? How will we know whether they are paid dividend or not? So we will have to analyze the net profit and also compare it with our retained earnings. So let's look at our capital. The capital, no additional capital. So it is 13,000. If the case is such that the capital was 13,000 for 2019 and has increased in 2020, we would have added the increment in the cash flow statement. And then if it has reduced we would have subtracted it from the cash flow statement. But in this case, the capital is constant. So during the year 2020, no additional capital was received. But let's look at the retained earnings. The retained earnings for 2019 was 42,000, but for 2020 it was 41,000. So it means something happened. Something actually happened. But mind you, so that's to inform you that when it comes to financing activities, we look at the equity side or the capital and then long-term liabilities. So that's what to look at for. So quickly, we have to do control accounts because the retained earnings, we are looking at how much profit has the firm made, then how much dividend have they paid. So if they paid dividend, we need to subtract it from the financing activities. So let's move to our Excel and prepare retained earnings control account, or we prepare a control account for returns or earnings control account. So we have something like earnings retained earnings. So the opening balance was the opening balance for the earnings. Let's confirm. 42,000. Okay. So the opening balance was 42,000. Then profit that was made, or net profit. So actually the retained earnings, they are profits that the organization made but have not been distributed to the owners or the shareholders, but rather it has been reinvested to boost the performance of the business. That's what we refer to as the retained earnings. So we want to know how much of this profit, this 25,000, that's the last part of the income statement, the net profit, how much of it has been paid as dividend. So 25,000. If they have retained everything in the firm, then the retained earnings would have moved from 42,000 to something around 67,000. So previously the firm was having retained earnings of 42,000. In this year they made a profit of 25,000. So then we look at dividend. How much was paid as dividend? So dividend paid. The dividend paid, we do not know how much dividend was paid, so we just indicate it in X. Then that will give us the closing balance for the retained earnings. So the closing balance in this case is 41,000. So how much was paid for earnings, or what's the value of X? So by so doing, you can see that the earnings that was paid will be 42,000 plus 25,000 minus X equal to 41,000. And by my calculator, the earnings that was paid was 26,000. 26,000. 26,000. So the dividend paid was 26,000. So we have dividend paid. The dividend paid was minus 26,000. 26,000. So is there any other financing activities? Let's check. No. We have checked long-term loan or long-term liabilities 0. Stated capital, no difference. So we are done with the financing activity. So we are done with the entire cash flow statement. So we are done with the 3 activities. So now let's move to the summary session. So let's move to the summary session. So at the summary session, we are going to look at the net cash flow. How much is the net cash flow? The net cash flow is the sum of the cash flow from the net cash flow from operating, investing, and financing activities. So we are going to add these 3 to get our net cash flow. So we have net cash flow, the net cash flow. So I'm going to add, so the net from operating is here. Then to that one, I'll add the other one from investing. Then I will also add, so since the dividend paid was a payment, we put it in bracket, but we add it because the Excel will automatically recognize it as a subtraction. So the net cash flow is actually 4,000. So to this, we are going to add the opening cash balance. So actually the opening cash balance must come at the top. So the opening cash and cash equivalent. So how much was the opening cash and cash equivalent in the balance sheet? Let's check. So under the current assets, initially it was 2,000 for 2019 and 6,000 for, so it is the 6,000 that we are trying to get. So 2,000 was for 2019. So we are trying to explain how come the amount is 6,000 at the end of 2020. So for 2019, we have the opening cash and cash equivalent to be 2,000. Then the net cash flow is 4,000. So let's try and see if we add these two, whether it will give us the closing cash and cash equivalent. If not, then we are wrong. So let's add these two. So 2,000 plus 4,000. Are we getting our 6,000? Yes, we have the 6,000. So we are done. So that is how to prepare cash flow statement using the indirect method. So basically, that's the approach. And then sometimes you find some questions whereby there has been changes in equity. You indicate them under the financing activities. The firm has purchased new equipment. You indicate them under the investing activities. So in case you have questions, feel free to ask me in the comment section, and then I'll gladly respond to all your questions. And watch out for the video on the indirect method, which I'll provide the link at the comment section of this particular video right away. God be with you in all your endeavors. Please like the video and subscribe to this channel for more educative videos. Thank you very much.